Tonight, we will walk through recent signals for Verizon stock and where near-term future movement could lead the stock. Hello everyone, I am the stock signaler, and I have built multiple algorithms and set up backtesters to determine likelihoods of future movement over the next 10, 25, 50, and so on trading frames. Before we briefly leave this chart, I want to point out the white downward pointing arrow. This is pointing to the two indicators at the bottom, each with a painted red background. These are the trigger signals we are basing this analysis off of. I will first address each signal individually, and then what it means when they simultaneously signal. Alright, so what do I mean when we have a signal that occurs? So in this case, we're going to use an example from April 10th, 2023 for Verizon stock. We had a signal occur here at the yellow line, so the red painted bar at the bottom is the signal, and it occurred based on the closing price of the stock on this date at $39.35, which is the white line here. Basically, this is a bearish signal, and the stock should move downward after this over the next 10, 25, whatever the studied bars are. After this occurs, you can see 2 days later, there's also another bearish signal, and we basically repeat the process. Okay, from this point, we should also go down over the next 10 days. And then later down the road, we have a bullish signal. It says, hey, based on the closing price on this date and at the end of April, we should go up, and so on. And this is how the signals work and play out. Tonight's first signal is the overtraded MACD algorithm, and this is based on 310 historical results. I have an overview table of what typically happens when a signal is triggered. Over the next 10 bars, we have a success rate of 95%. Over the next 25, it goes up to 96, and it continues to count. Now, one of the things I did not mention in the how the signal works is a delay signal. Something I noticed during my studies is what I call a signal delay. This is where a signal occurs, however, the signaled movement may not occur right away. Most algorithms are reversal indicators, which is the case of the ones we'll study tonight. However, some are continued impulsive movement, where the stock will continue to move in the direction it has been moving prior to the signal. So in this case, something that I noticed, we don't have signal delays beyond 1%. So basically, we're looking for the stock to go down in this current instance. And let's go over to what we're looking at. All right, so we're looking for the stock to go down into this green box. The largest box is 100% of all movement, and then 50% of that movement is actually targeted in the smaller green box. Our signal occurred at the closing price of $42.13 for Verizon on 2 February. And typically our delay would be the red area toward the top. However, in this case, all you see is a red line. That's because the data says it normally occurs within a short period of time. So let's look at 10 days. Okay, so here's what a delay looks like for a 10-day period of time. Basically, the stock would close out at 42.13. And then if it runs into a signal delay, instead of moving downward as expected, it may actually move upward into these red boxes first, and then it will continue to go downward into the green boxes. So the next thing we'll look at is what we're expecting for some target zone. Now I've pre-made some of these. So my overall zone that we're looking for is this larger green box. Based on the 10-day targets from the MACD, we're looking at this zone right here, and then here is also the zone for the 25-day. The 10-day is between 40.26 and 41.59, while the 25 is between 39.25 and about 41.22. So we're expecting some sort of downward movement here over the next about 25 trading days or so. Now we'll move to the next signal, and that will be our SAG Gauge, our conservative SAG Gauge. And this is based on 211 historical results. And once again, here is our overview table. It looks like we have a 95% success rate. That signal is accurate with only a small delay rate. However, this delay does go over 1%, which is totally acceptable. Sometimes we can go up as high as 4 or 5% before the signal still kicks in time. So let's go to that chart. And here's the 25-day. It looks roughly the same as what the last signal did. We have the larger box at the bottom we still have the same signal price, same closing price, and then we have that single red line for our delay zone. Again, when we open it back up to our 10-day, the statistics look a little cleaner for us. Oh, actually not for this one. So for this one, our delay must only be 1 day. And sure enough, we go back to this chart. The bars to low before high, that is our delay. It looks like when a delay occurs, it typically happens on that first day only. So we'll go back to our trading view chart. What we actually could be looking at is something like this. So we signaled here at the close. If we have a delay, we're looking at maybe one day up somewhere in here. And then we'll continue to do our drops down through these boxes. Now, so that's when we consider each individual signal. One of the next things we're going to look at are simultaneous signals. They have occurred 60 times. The stock has dropped at least 0.09% on 58 of those occasions. This would be a successful signal 96.7% of the time. The median decline is 2.4% in 10 days following the signal, and the maximum decline after the signal is 8.16 within the first 10 days. The success rate and that minimum move remain the same when we look at the 25-day trading window after the signal, and the median move actually increases up to 4%, and the third quartile moved from 3.84% to 6.03%. So basically, we could be looking at a decline in this case somewhere between maybe 4 to 6% at the overall at the most. Something else that we're going to take a look at real quick is the last time this signal failed. So I said it's been successful 58 of the 60 times. We're going to go back to the year 2000. Back here on March 22nd, we got the signal here. So both signals at the bottom in red, and the signal then proceeds to move up. And it actually does not come back down over the 10 days and does not come back down over 25 days. This is slightly interesting considering the major indices and most stocks began the dot-com bubble burst at this time. Verizon did not drop below the signal closing price until the 28th day after the signal. So I just found that interesting that the last time this failed was in the year 2000, and that's kind of what a failure would look like in this instance. So now we're back to present day. Something else I want to take a look at is we're just going to scroll briefly backwards to see when we get the dual signals, what tends to happen. So here's a dual signal from 6 September of last year. So we got our signal here expecting to go down, and we did go down, so that one held true. Here's another one from June of 2022. Again, we get our signal. We have a bit of a delay up, and then we do go down. And so on, this kind of repeats. This one was, I would say, a larger delay. So our signal occurred here. Technically, we dropped the next day before we went up, and then we did come down again. I would almost look at this one more of a failure, but per the statistics, it actually met the criteria to be a success, even though it was most likely a small success. Here's another one where we did go down within the first 10 days. Signal price here. It did go up first, nice delay, and then it came down. Same here, and then another one right here. So that's basically just looking at what happens when we get the dual delay. Now, based on the simultaneous data, we're going to turn these guys off. What we have to do is we have to break below this line. So the close, the target close where the signal occurred was at 42.13. Based on the historical data, we typically have a new low at least below the level of 42.09. I think we'll probably go significantly below that. The 10-day window, we're looking for 1.3% to a 4% drop over 6 to 9 days, and this is based on taking the simultaneous data and putting it together. So that's our 10-day box. This is kind of our target. And then for the 25-day, kind of scoots over here. And this is about 2.4% to 6% over 13 to 22 days. So once again, I wouldn't be surprised if we saw some sort of delay where we actually bounce up. Even though most of the data has occurred over 1 day, we did see a couple of those instances where it was a couple more, so maybe it goes up a little bit. and then it kind of proceeds to come down, hits its 10-day target, and then he can still come down here somewhere in the 25. And then I don't know what happens after that. Now, it's also possible that once he hits his, as long as he enters the green box, everything's a success. 10 days is success, 25 days is success. Heck, all he has to do is drop below 42.13. So this is not necessarily indicative of some sort of crazy crash for Verizon. It's just saying over the next 25 days, we'll most likely see some sort of price decline. I'm guessing at least below 41.62. So that's all for now. Time to watch this play out over the next couple weeks, and I appreciate you taking time to watch this analysis. Thank you.